Hey everyone, and welcome back to Talk Tickers. Today we are going deep on Align Technology's Q4 2024 earnings call. So get ready for Itero scanners, Invisalign updates, and maybe even a few surprises along the way.
Yeah, there's definitely a lot to unpack here. Align is navigating a pretty complex landscape, international growth currency fluctuations and all these technological advancements.
Okay, let's kick things off with those headline numbers. Align pulled in $995.2 million in revenue for Q4, a 4% increase year over year. Not bad, right?
Yeah.
Especially given the current economic climate.
Yeah, agreed. And their clear aligner volume saw a pretty solid jump, 6.1%. But it's not all smooth sailing. The average selling price, or ASP, for those clear aligners actually dipped year over year.
Yeah, the strong U.S. dollar is definitely making its presence known there. If I remember correctly from the call, it cost Align something like $14 million in Q4 alone. And then you've got the whole product mix situation and those discounts they've been offering.
Yeah.
Makes you wonder, is this ASP dip just a temporary blip or the start of the trend? What do you think?
It's a valid concern for sure. The strengthening dollar is definitely a factor, and it's something Align will have to keep a close eye on. But I wouldn't call it a trend just yet. I mean, remember, Align operates in a really dynamic market. There are a lot of moving parts.
All right, fair enough. Let's shift gears to some brighter news. Align's international business is absolutely booming, especially in Europe, the Asia-Pacific region, and Latin America. They're really making their mark globally.
Yeah, it's pretty remarkable. And it's not just about market penetration. There are also some pretty favorable economic factors at play in those regions. I mean, think about it. The rising middle class in a lot of these countries is driving demand for, well, aesthetic dentistry. And Align is in a great position to capitalize on that.
Speaking of growth drivers, let's talk DSOs, those dental support organizations. Align's partnerships with these groups are paying off big time. It seems like DSOs are adopting Align's technology way faster than individual dentists.
Absolutely. Their scale and their centralized decision-making processes make them like ideal partners for Align. It's a win-win. DSOs get access to cutting-edge technology, and Align gets, well, a fast track to market penetration.
It makes sense. But do you think Align can replicate this success with individual dentists? Or is there something unique about the DSO model that makes it so receptive to what Align's offering?
Well, that's the million-dollar question, isn't it? While the DSO model has clear advantages, Align can't afford to ignore that huge market of individual dentists. They'll need to figure out how to incentivize adoption and, I guess, demonstrate the value proposition of their technology in a compelling way.
All right, let's switch gears a bit and talk tech. Align launched their Itero Luminous Scanner last year, and it was a hit with orthodontists. But now they're adding restorative capabilities targeting general practitioners even more directly. This feels like a pretty big deal.
Yeah, this could be a game changer. By expanding into the general dentistry market, Align is seriously broadening its potential customer base. The Itero Lumina isn't just an orthodontic tool anymore. It's becoming like a comprehensive digital dentistry platform.
And on that innovation front, Align is making some serious moves with direct 3D printing. Their Invisalign palatal expander is already on the market, and they're piloting direct printed retainers for Invisalign First. It's pretty amazing to see how they're integrating this technology into their workflow.
Yeah, it's fascinating. Direct 3D printing has the potential to revolutionize Align's whole manufacturing process. We could be talking lower costs, improved efficiency, maybe even an expansion of the types of treatments they can offer.
It's almost like they're taking control of their entire supply chain and pushing the boundaries of what's possible in orthodontics. But it's not all sunshine and roses for Align. There are a few dark clouds on the horizon, starting with that whole U.S.-Mexico tariff situation.
Right. That potential 25% tariff on shipments from Mexico to the U.S. could cost them hefty $4 or $5 million per month.
Ouch. That's a major risk. What steps is Align taking to mitigate this? Could it impact their manufacturing strategy or even force them to, adjust their pricing?
Well, they're exploring a few options. They mentioned possibly shifting some production to Poland.
Yeah.
And they're ramping up manufacturing capacity in China to serve that booming Asian market. As for pricing, well, it's a delicate dance, isn't it? They need to stay competitive while also protecting their margins.
It's a tough spot to be in, for sure. On a slightly more positive note, Align recently scored a win with the UK tax authorities, securing a $100 million refund for disputed VAT charges.
Yeah, that was a much-needed victory, although there's still a $7 million piece of that puzzle pending a court ruling. The bigger question is, does this ruling set a precedent? Could Align face a 20% VAT on all UK clear aligner sales going forward? That would significantly impact their bottom line in a key market.
We'll have to wait and see how that one plays out. So we've covered a lot of ground here. Strong revenue growth, but dipping ASPs, booming international business, exciting tech advancements, and those looming tariff threats. It's a complex picture for sure.
Absolutely. Align's at a crossroads. They have to balance all these competing forces while continuing to innovate and adapt to a rapidly changing market.
Well, we'll dig into all of that and more after a quick break. Stay tuned for part 2 of our deep dive into Align Technology's Q4 2024 earnings call.
Welcome back to Talk Tickers. Before the break, we kind of laid the groundwork, right? Exploring Align Technology's recent performance, key initiatives, and, the broader industry dynamics. Now let's roll up our sleeves and really get into the nitty-gritty.
You're right, it's time to tackle some of those big questions hanging in the air. We talked about Align's impressive international growth, but also those, pesky foreign exchange headwinds. How sustainable is that growth, if the dollar stays strong? And how effectively can Align actually mitigate those currency risks?
Those are the million-dollar questions, aren't they? On the growth and sustainability front, I think it's important to remember that international markets represent a significant, untapped opportunity for Align. Penetration rates for clear aligners are still pretty low in a lot of countries, especially compared to the US. So even with a strong dollar, there's a lot of room to run.
That's a good point. It's not just about, maintaining existing growth rates. It's about tapping into those new markets and reaching new customers.
Exactly. And Align seems to get that. They're making strategic investments in their international sales and marketing, tailoring their products and services to local preferences, and building strong partnerships with dentists in key regions.
So they're not just trying to export the U.S. model. They're actually adapting to the unique dynamics of each market.
Exactly. And that's crucial for long-term success.
Now, what about those currency risks? How can Align protect themselves from the negative impact of a strong dollar?
Well, there are a few strategies they can employ. One option is to hedge their currency exposure through financial instruments. That can help to, lock in exchange rates and reduce their vulnerability to those fluctuations.
That sounds like a pretty standard approach for any multinational company, right? Is there anything else they can do?
Sure. Another strategy is to diversify their manufacturing operations. By producing goods closer to their end markets, Align can reduce their reliance on exports, and that helps minimize the impact of those currency swings.
We've already seen them hinting at that, right, with their comments about potentially shifting some production from Mexico to Poland. And they're also ramping up their manufacturing capacity in China to serve that, rapidly growing market.
Right. So a combination of financial hedging and operational diversification seems to be their approach. And of course, they can always explore pricing adjustments in certain markets to offset some of that currency impact, but they got to be careful not to price themselves out of the market. It's a delicate balancing act.
For sure. Agreed. Now, let's shift gears again and talk about another key challenge facing Align competition. As we discussed earlier, the clear aligner market is getting crowded. How effectively can Align defend their market share against these new entrants?
Well, this is where their investments in innovation, brand building, and customer relationships really come into play. I mean, Align's been the pioneer in this industry. They've built a really strong brand reputation, and they have these deep relationships with dental professionals.
They're really leveraging that first mover advantage, but are they getting complacent?
I don't think so. I mean, they're not resting on their laurels. They're continuing to innovate, introducing new products and technologies to stay ahead of the curve. Their move into direct 3D printing is a great example. They're not just trying to compete on price, they're trying to, redefine the whole industry.
And they're investing in all those education and training programs, right? To help dental professionals get the most out of the products and services. They're not just selling products, they're building a whole ecosystem around their brand.
That's a good way to put it. And they're leveraging their vast database of patient cases to advance the science of orthodontics and develop even more effective treatment solutions. So yeah, it sounds like they're taking a very holistic approach to building a sustainable competitive advantage.
They are. And I think it's the right approach. In a rapidly evolving market like this, you can't just stand still. You have to constantly innovate, adapt, and differentiate yourself.
Couldn't agree more.
Now let's talk about a potential wild card. The regulatory landscape. We touched on this earlier, but could you elaborate on the key regulatory issues facing Align and how they're navigating this, complex terrain?
Sure. So as I mentioned before, the classification of clear aligners is a big one. The FDA currently regulates them as Class 2 medical devices, which means, they require a certain level of pre-market review and oversight. However, there's an ongoing debate about whether they should be reclassified as consumer products. That would ease some of those regulatory burdens.
How would that reclassification impact Align? Would that be a good thing or a bad thing for them?
Well, it's a double-edged sword. On one hand, it could make it easier and less expensive for a line to bring new products to market. It could also open up new distribution channels, potentially allowing them to sell directly to consumers.
That sounds like it could be a major growth opportunity, but what's the downside?
Well, the downside is that reclassification could also lead to increased competition from new players who, might not have the same level of clinical expertise or quality standards as a line. So it's a trade-off, potential growth, but also potential risks.
So it's a trade-off between potential growth and potential risks.
Oh, right.
Got it. So how is Align handling this situation?
They're being proactive. Align is actively involved in this whole debate, advocating for a regulatory framework that, strikes the right balance between innovation, patient safety, and consumer access.
So they're trying to shape the rules of the game.
They are, and they're also closely monitoring regulatory developments in other countries, as they expand their global operations. Each market has its own unique regulatory environment, and Align needs to navigate those complexities effectively.
That makes sense.
And let's not forget about the reimbursement landscape. Align's also keeping a close eye on potential changes to reimbursement policies for orthodontic treatment. These policies can have a big impact on demand for clear aligners.
It's a reminder that Align's business isn't just about, product development and marketing. It's also about understanding and adapting to the broader healthcare landscape.
Right. They need to be aware of all those, political, economic, and social factors that can influence the demand for their products and the profitability of their business.
It sounds like they have a lot on their plate. But speaking of the future, what are some of the key growth opportunities and challenges that Align is likely to face in the coming years?
That's a great question. And I think there are a few trends worth watching. On the opportunity side, the global demand for orthodontic treatment is expected to continue to grow. That's driven by factors like rising disposable incomes, increasing awareness of the importance of oral health, and the growing popularity of aesthetic dentistry.
So the overall market is expanding. That's good news for Align.
It is, and Align is well positioned to capitalize on this growth. I mean, they have a strong brand, a global footprint, and a proven track record of innovation.
But they're also facing some challenges, right? We've already talked about the competitive landscape and the regulatory environment.
Yeah.
What else should we be watching for?
One key challenge is managing their costs effectively. As they expand globally and invest in all these new technologies, they need to make sure they can maintain their profitability, especially in a potentially inflationary environment.
That makes sense.
And they also need to be mindful of potential disruptions to their supply chain. I mean, the COVID-19 pandemic really highlighted the vulnerabilities of global supply chains. Align needs to have contingency plans in place to mitigate those risks.
What about talent?
Good point. Another challenge is attracting and retaining top talent. In a competitive industry like this, having the right people is crucial, right? Align needs to offer competitive salaries and benefits and create a culture that fosters innovation and professional development.
And they also need to stay ahead of the curve when it comes to technology, right? The orthodontic industry is constantly evolving, so Align needs to keep investing in R&D to maintain their leadership position.
Absolutely. They can't afford to become complacent. They need to be constantly looking for new ways to improve their products and services and ultimately create value for their customers. So it's a dynamic and challenging environment, but also one with significant growth potential.
Align has a lot going for it, but they also have their work cut out for them. It'll be interesting to see how they navigate these challenges and opportunities in the coming years. But before we get to all that, we've got to get through our favorite segment. This is not financial advice.
All right, let's let those imaginations run wild.
So we already heard your bold prediction about Align making a major international acquisition. Do you have any other, outrageous but plausible trade ideas brewing?
I do, actually. Okay, here's one that's a bit out there, but hear me out. Align's been laser focused on orthodontics, but what if they expanded into the broader dental market?
Interesting. Could you elaborate on that?
Sure. Imagine if Align developed clear aligners, but specifically designed for teeth whitening or for, minor cosmetic adjustments, like closing small gaps, correcting slight crowding, that sort of thing.
So they'd be moving beyond traditional orthodontic treatment and into, the realm of cosmetic dentistry. That's a pretty big leap.
It is, but they could leverage their existing technology, their brand recognition, and those relationships they have with dental professionals to quickly gain traction in this market.
It's a bold move, but I can see the potential. They already have the infrastructure and the expertise in place.
Right. And they could potentially reach a much larger customer base. I mean, think about all the adults who aren't necessarily interested in full-blown orthodontic treatment, but who might be willing to try a less invasive, more affordable option for improving their smile.
It's a fascinating idea.
Yeah.
And it would allow Align to tap into that, well, growing trend of consumer demand for aesthetic dentistry.
Exactly. And it could help them differentiate themselves from the competition and create a whole new revenue stream.
All right, listeners, once again, we have to emphasize that this is purely hypothetical. We're not financial advisors, and we're not making any investment recommendations. This is purely for entertainment purposes. So don't go investing based on our wild speculations.
Agreed. But hey, it's always fun to think about the possibilities, right?
Yeah, absolutely. Well, we've covered a lot of ground in this part. We explored the dynamics of Align's international growth, how they're balancing the opportunities of expanding into new markets, but also those challenges like currency fluctuations and a potentially volatile global economy. We talked about the competitive landscape, the importance of innovation, brand building, customer relationships, and fending off new entrants and maintaining that market share. And of course, we delved into that complex regulatory environment, right? Examining the ongoing debate over the classification of clear aligners and how Align is working to shape a favorable regulatory framework. But there's still a lot more to uncover. So stay with us for part 3, where we'll dig into Align's financials in more detail, examining their revenue streams, profitability, and cash flow. Welcome back to Talk Tickers. We spent the last 2 segments, really dissecting Align Technology's strategic moves, their competitive landscape, and those broader industry trends that are going to shape their future. Now it's time to dive into the heart of any earnings call, the financials.
All right, let's get granular. Let's unpack those key financial metrics. We'll examine those revenue streams, break down their profitability, and of course, analyze their cash flow.
So let's start with the top line, right? Align brought in $995.2 million in revenue during Q4 2024. That's a significant number, but where exactly is that revenue coming from?
Well, their business can be broadly divided into 2 main segments: clear aligners and systems and services. As you might guess, clear aligners are really the star of the show, right? Accounting for the lion's share of their revenue. In Q4, that segment brought in $794.3 million.
Wow, that's a huge chunk of their overall revenue. It really highlights just how dominant their clear aligner business is. What about the other segment? What kind of growth are they seeing in systems and services?
It might seem small in comparison, right, at $200.9 million, but the systems and services segment is actually growing pretty rapidly. We're talking a year-over-year growth rate of almost 15%. That's pretty impressive.
That is a good sign. It seems like this segment is becoming increasingly important for Align, especially as they push further into digital dentistry with things like, their Itero scanners.
Exactly. Those Itero scanners are a key component of that digital platform, and they're really driving adoption among both orthodontists and general practitioners. And as Align continues to innovate, continues to expand their product portfolio, well, this segment's likely to play an even bigger role in their future growth.
So they've got a strong top line. Now let's dive into profitability.
Yeah.
Their gross margin for Q4 was 70%. That seems like a healthy number, right?
Yeah, 70% gross margin indicates they're managing those costs of goods sold pretty effectively, shows they have a solid pricing strategy and efficient manufacturing operations.
That's good to hear, especially considering that pressure on their ASPs, right, from the strong dollar. But you mentioned that there are other factors that can impact gross margin.
Right. Gross margin can fluctuate depending on factors like product mix, geographic mix, and of course, currency movements. So while 70% is good, it's something they'll need to keep a close eye on going forward.
Now, let's look at their operating expenses, which came in at $552.8 million for Q4. That's a pretty big number. Where's all that money going?
Well, like most companies, a big chunk of that is related to sales and marketing. I mean, Align invests heavily in promoting their products and building relationships with those dental professionals.
Makes sense. Got to spend money to make money, right? But are there any other big areas of spending we should be aware of?
Well, they also have significant R&D expenses as they, strive to stay at the forefront of innovation in the orthodontic space. Plus the usual general and administrative expenses like salaries, rent, utilities, all that overhead.
So it seems like they're spending money in all the right places. But what does that mean for their bottom line?
Well, their operating income for Q4 came in at $144.1 million, which resulted in an operating margin of 14.5%. That's, a pretty respectable margin for a company in a growth industry. And it reflects their strong gross margin and their ability to manage those operating expenses.
Now let's talk cash flow. Align's cash flow from operations for Q4 was $286.1 million. That's a really healthy number. It shows their business is generating significant cash.
It does, and that gives them a lot of flexibility, to invest in growth initiatives, pay dividends, or repurchase shares. Speaking of which, they spent $202.9 million buying back stock in Q4. That's a significant use of cash. And it suggests that, well, they believe their stock is undervalued.
Interesting. So what's their overall financial health looking like?
Well, they ended Q4 with $1.04 billion in cash and cash equivalents. That's a strong cash position. And this is important. They have no debt, which gives them, tremendous financial flexibility. And it makes them less vulnerable to those rising interest rates.
So financially speaking, Align seems to be firing on all cylinders.
Yeah, they are. But it's important to remember that past performance isn't necessarily a guarantee of future results. They still face a number of challenges: increased competition, a volatile global economy, and of course, potential regulatory changes.
Right. They'll need to continue to innovate, manage those costs effectively, and adapt to a changing market if they want to maintain their success.
Right.
But based on their current financial strength and those strategic initiatives, they do seem to be well positioned for continued growth and profitability.
I agree. They've got a solid foundation to build on.
Well, that wraps up our deep dive into Align Technology's Q4 2024 earnings call. We covered a lot of ground, examining their strategic moves, dissecting those financials, and exploring the broader industry trends shaping their future. I want to thank you for joining us on this Talk Tickers deep dive. We hope you found it insightful, and as always, remember, this is not financial advice. Do your own research, make informed decisions, and stay tuned for more deep dives into the world of business and of finance.